Hello traders, Mark Chapman here. I'm the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 6th, Monday the 6th of February 2017. You might be able to hear from my voice, I've got a bit of a chest infection, so I do apologise if I cough and splutter through this video. Try my best not to. Taking a look at the dollar CAD today, and we're in a kind of a very interesting area. I'm just going to highlight this particular bit of price action versus where we are now, and what this represents is when the Fed raised interest rates back in the first third of December, and as you can see, we traded away from where we historically been. That makes a lot of sense when an interest rate you have an interest rate rise like that, especially from the depths of where we currently are. That would make sense to see some strength in the currency, but as you've seen, since then we've been heading down back into that location. Now, what doesn't make sense is that we're below that area now. So this is where price is now versus that interest rate hike. Now, if the price of the dollar was over here, that 130.70 area, 130.50, then it was at that price, it had a value in and around that area when they had 25 basis points as their interest rate. It's now 50 basis points, right, 0.5%. So by rights we shouldn't be trading below here. Now of course that doesn't mean you can't trade below recent interest rate hikes, because you certainly can, but what this actually is representing is an area where there's quite a bit of value, in my opinion, in the dollar, and there's lots of upside potential. So with that being said, let me just clear up this area. So we can see what we're doing. Now then, just going up on the daily, this area has been quite an area where prices come up to it, sold off, so there's some resistance there, breaks through it, pulls back, bounces, some support now, right? And then going forward it's been traded as such, so support, breaks, becomes resistance, breaks, becomes support, and so on and so forth. So this area is quite a magnet for price, and we're at that location now. Now on the daily, price is struggling to close below these levels here. You can see that. We don't need to go too much higher than that, but as you can see, price can't close below those prices, those previous levels over here. Okay, now that's the 130.17 to 129.98 area, something like that. You'll start seeing some indecision candles. Okay, you got a bit of a spinning top, etc. So at the moment, if you were short this, you wouldn't be too panicky in as far as the price action hasn't yet developed far enough for you to be concerned by it, but you would obviously be slightly concerned by the fact that you are trading into some heavy support. This level, as I said, has been traded historically. So what's interesting about this is that you've got a few dynamics going on which you may not normally consider as a trader. I encourage you to start thinking in these terms, but let's just take this area here. So a lot of people would consider this area now to be somewhat of a range, as price has traded off it a couple of times, right? So once, back to it, twice and away, and this bottom level certainly been well developed. Now then, if you were a seller off that top edge, so I'm going to ask you a very straightforward question, and you were trading this as a bit of a level trader, if you think in terms of like a bit of a range trade, where would you, if I could draw a question mark in here, where would you, in fact maybe I can, where was the magic of technology, there you go, where would you think about taking some profit? Right, so you sell here, where might you consider taking some profit? Okay, put your answers on an envelope. No, just kidding. In this area, I would imagine somewhere in here, anyway, you might have considered this as a potential profit-taking area, but it's certainly in and around that vicinity, right, where this level's been traded lots of times in the past. This would look like a pretty decent trade and a pretty decent area to start taking profit over here. Now, if you were a seller up there, you sold up there, then as price starts to creep into the area where you're considering taking some profit, what tends to be your sense, like what reactions and emotions are you feeling in and around that moment? And I would suggest that you are motivated for one, a little bit nervy, right? Now, none of us should suffer with these feelings. The reality is people do. And what's important to understand when trading traps in the way and trading hacks that the way that we trade is part of it is understanding the psychology of our opponents. And the reason we're able to do that with a high degree of accuracy is because we have been that individual before in the past. It's really just a mirror image of our own behaviour historically, and we're using it now against our opponents rather than just kind of willfully going along and not really thinking too much about it. So as price comes into that level, I would suggest that you would consider taking some of that money, because you're up some money and you are very close to the end of what was the trade. A lot of people start getting nervous, so imagine that's the level. People start getting nervous because they start wondering whether or not price will actually reach the level, and then heaven forbid then the price would reverse, and they would not realise that paper profit. So they're highly motivated. Now then, if they were a seller off that top edge, which we know that there are some people who took that trade, then right, so it's a double top. That's what a lot of traders who trade levels like to see. Like to trade off. As it comes into the level here, they will start getting nervous and start considering taking some profit. Now, if they were originally a seller, then the transaction that must occur for them to exit those positions with their profit intact is a buy trade. Right? It's always the opposite transaction to the one that you took originally, whether or not you've been stopped out, manually exited the position, or you taking your profit, or you're not manually doing that, or you're taking your profit via an order. It's a buy trade, right? So that equals demand. Well, that's interesting because we want to be a buyer, and we're not going to move a multi-trillion-dollar market all by ourselves. So it's good that we are making a very logical assumption that there's going to be some traders in here buying, but it's forced buying. It's what I call forced buying. It's forced demand. And why is it forced? Well, these people want their money. So it's not something, that they're going to just willfully not react to. They're very motivated to take that money off the table. So it's a forced action. It's forced demand. It's forced buying, right? Again, that's good news if we're looking to be buyers, right? We're going to need some help. So that's one supply-demand dynamic that's going on here, and there are more, but it's a little bit beyond the scope of this session. But I want you just to get your head around thinking about the fact that it's wrong to just do your analysis and not consider the historical patterns that are in and around the price action that can actually give you some insights into what other traders who've been trading for different reasons, what their motivations may be in the location that you're considering doing business. It's important to know that, because if we have a double top at the top edge there, it's important to us if we're looking to buy down here, because we know that there's going to be that forced buying. Don't usually write backwards, honestly. Forced buying, and that's a positive for our analysis. If we want to be buyers, we want some help, right? So it's good that that's there. Now, as I said, there are other reasons and other dynamics going on that are adding to this overall situation, but for now, that's that's hopefully that gives you some insight into the way that we think about some of our trades. Now then, as I said, if you were short in here off a retracement or something, that's not the end of the world so far, but it is definitely an area where things are starting to change. Now let's look a little bit closer at this, and what we have is price comes down, makes a new low and pulls back, and it's pulling back into that prior low, and that then the idea is that then becomes support, right? So let me just clear this up a little bit. You see it a little bit better. So what traders tend to do is in a market that's been trending, however that's on a micro scale, it doesn't matter. If you just think about those traders as you see them, meaning whatever time compression you're on, so this is a forward chart, if you can see a minor trend, then just focus on thinking in those terms, focusing on the retracement traders under those conditions. So if you were a retracement trader and you were looking at price make this new low, and if you looked at that underside of that level, price pulls back into that level, that's probably a 61% Fibonacci, right? And traders go short. Price pulls back into the underside of that new low, and traders go short in here, right? Now then, it's just starting. That's kind of worked to a degree, but it's failed to follow through in these next examples. Now what that is essentially the beginnings of it's the beginnings of the traders who are taking those trades. It's the beginnings of them becoming trapped. See that there? That should have followed through if it was going to. This drop should have followed through if it was going to. So should have that, and that drop didn't take out that prior low. So every time it nosedives to the downside, it doesn't quite make it, right? After it's made that low, it just keeps failing to do so. But what that's doing is that's a process of some people would refer to that as a sort of an accumulation, where a group of traders are being drawn in one side, and then the big guns are taking their positions. So if you're about to take a massive long position, you're going to need some sellers, and that's why you see these little accumulations on charts. Price backs and fills, and it looks as if it's heading down, but then it doesn't, and it looks as if it's heading down, and then it doesn't, and it looks as if it's heading down, and then it doesn't. And what that is that is what it says on the tin, right? Someone big, or several parties that are big, are accumulating buy contracts, buy positions, and they're doing so by enticing shorts in first, and then up it goes again, and then enticing them, and then up it goes again. And if you're a big institution, you obviously need a lot of sellers. In the case, if you're looking to be a buyer, you're going to need a lot of sellers. So that works out kind of nice. That works out kind of nice for them. So as this starts to fill, it's not a trade yet, but if we break up above here and pull back, I would suggest this is a pretty nice place. Location wise, it's a cracking little trade from a location perspective. Fundamentally, the dollar is stronger, regardless of the fact there's been some negative sentiment around it. Recently, it's the only major economy that's actively raising interest rates, another 3 hikes this year. And I wouldn't bet against that. Whatever you think of Donald Trump, I believe you're going to see an explosion in jobs in the US in the coming months and years. So the case for a consistent trajectory of interest rate rises, I think is fairly set. But of course, these things can change. But in the context of this scenario, then this is, in my opinion, a good location, good value. We're below those prior levels where the interest rate was less than it is now, doesn't stack up, and we're starting to see some failure to follow through to the downside. So again, just to clarify, if we get a break above these swings, a little bit of a pullback, you're good to go. I think this is going to be a good trade. Stick your stop below this level here, down in the 129.50 area, and you should be happy days. Go for 2 to 1. Always make sure you're trying to keep the math on your side. And if you'd like to learn more about what we do, we hack. Goodness, we've spent a long time doing this. We've hacked the strategies of basically all the major strategies and all the major core disciplines that traders employ to enter trades. We've hacked their strategies, so we know where they take trades, we know where they're in trouble, importantly. So if you've ever taken a retracement trade that looked like a slam dunk trade, but the second you got in it, it went against you, then I know that's occurring. Unfortunately for you, you're going one step too early, and you're not realizing that other people are trying to get on the other side of that scenario, and that your moves are very, very obvious. And it's not pleasant to say this to you, but it is obvious. What you do is obvious. When you buy off levels of support and resistance, it's obvious. When you buy breakouts, sell breakouts, it's obvious. When you take retracement trades, your moves are obvious. And if your moves are obvious, then you're obvious, and that's a bad thing. Right? So if you'd like to learn how to not be on the wrong side of that equation, and you'd like to come and join me in my inner circle, then click the link below. And I really look forward to welcoming you, and it just makes all the sense in the world, because it just does, right? So do it now, click the link, and I'll see you on the inside.